the Trader Rundown. Joining me now is Dan Deming at KKM Financial. And Dan, I'm so glad to have you on the show. You've been a long time trader.
I've been in the markets for quite a long time.
Yep. But that's a good thing, because I'm always wondering about people who are investing with those who have not been in the market this long. It's easy to make money when the market's going up, but that never lasts forever.
Correct, and yeah, we have seen a few cycles here in the last 20 or 30 years where the market has shown an ability to run up quite significantly. So yeah, you do have people when they enter the markets, particularly younger people when they get in their 20s or early 30s who are coming in the market for the first time, and if they come in during one of those times, they have never really experienced what it's like to see a drawdown in their account.
As a more seasoned trader, what do you do? How do you manage risk, whether the market's going up or going down, and especially when you want to lock in the gains that you've made, because people don't like to lose money.
Right, yeah, and there's a lot of different ways you can try to accomplish that. I mean, there's no foolproof way. I mean,
Sure.
Typically when the market goes down, you are going to lose some principal. It's just the nature of the game. I mean, with every risk, there's a reward, there's a risk. So one thing that we look at is diversification for sure. You're trying to diversify across various asset classes and different types of styles of investments. Also, you can use measures out there. There's like a Sharpe ratio, which is a measure. If you Google that, you can look it up. It kind of explains, it really gives a kind of a profile of a risk reward of each individual investment based on a couple of different metrics using the risk-free rate of return and a couple other things. So look that up for a measure of risk reward when you're measuring investments. Secondly, as far as diversification, using some of the analytical tools out there, Sharpe ratio, Calmer's another one. Those are a couple ways.
I also want to ask you about big events, and one of the biggest events we tend to have each month is trading the jobs report. So how do you set up for that?
It just depends. Again, if you're an investor, I would say that really shouldn't impact your thinking too much. If you're a trader, from a trader standpoint, particularly if you're like my former days as a market maker, it just, again, you try to set up so that you think you have the best opportunity for a positive expected value. And you can do that in various ways, Angie. You can use options. That's what, certainly my background was in the options market, but there's other ways to do it as well. But you got to measure the risk of what you have on versus the reward, given the fact that what you know about how the market reacts after those job numbers.
With the jobs report, is there a certain data number that you want to look at going into a report?
The wage inflation number. That's the one that I really look at, because that seems to be the one the Fed is focused on.
And that could determine what happens next with interest rates,
Exactly.
which of course can roil the stock market.
Yeah, it changes the dynamics.
So as long
Absolutely.
as that wage rate is going, up or down, does it matter?
It's just kind of if it's going to be, how it's going to be interpreted by the Fed. So it is a very good indicator, at least the Fed believes it's a very good indicator of the possibility of future inflation or the lack thereof. So when you see wage inflation in that number, that has the tendency to lead them in a direction where they feel a little bit more confident about raising rates. And if not, then they might be a little more dovish or hold off. So a lot of market participants do look at that wage right currently, given the current market climate, they look at that number.
And most Americans like it when wages are going up.
That is correct, yeah, absolutely. Just
Thanks.
as long as the inflation, everything else around them is not going up too much and faster than what their wages are going up.
Thanks so much for coming on the show today.
Yeah, thanks for having me, Ange.